There is a massive opportunity right now to make a ton of money. In my personal opinion, it is going to be making a short position on Robinhood. I'm going to talk about how I am doing this, why I am doing this, and if Robinhood could theoretically go bankrupt. I think you guys will get a lot out of this video, and if you are somebody that feels screwed by Robinhood really manipulating our order flows or letting Citadel manipulate our order flows, this could be perfect for you guys. Keep in mind, I am not a financial advisor. We're not going to be going over direct trades. If you guys want access to my direct trades in real time when I do make this trade on Robinhood or any other stock, option, or crypto, check out the link down below for the buy and sell alerts. But that is not important. We are going to be talking about the whole Robinhood situation. Like I said, why I am shorting Robinhood, as well as if they can go bankrupt. Also talking about this whole Evergrande situation, as well as the debt ceiling, because I think the debt ceiling is the biggest concern at the moment. But once this goes away, I think you're likely to still see the market go down just because of the China real estate bubble that may be getting ready to pop, with this Evergrande situation being the main catalyst. So let's not waste any time. Let's get into this video. Tap, tickle, touch, or smash the like button. Consider subscribing to the channel. Let me know down below in the comment section what you guys think about this trade, specifically shorting Robinhood. So let's talk about it, guys. This is Robinhood's chart, and we are just going to go over this just a little bit. Now, Robinhood has been trading pretty much sideways. Now, $40 is really the support level. If we can break out under $40, you're looking at some massive downside that is coming for the stock. And that's really all I want to say at this current moment. I think Robinhood is really in the situation right now where they are caught up in a lot of bad press, specifically with Citadel, these whole allegations we have seen back and forth. And I want to compare this to something. If you guys have been invested in, say, NIO or some other Chinese stock, NIO has been doing fine. I have been invested in NIO for a very long time. Their business is doing fine, but investors don't want to be involved with drama. That is the fact here. So I think regardless of, Robinhood's fundamental business is declining, because obviously people don't want to trade on Robinhood and they make most of their money off of people trading with payment for order flow. But overall, investors don't want to be a part of something that has so much drama going on. Most relevant scenario I can put towards that is Chinese stocks that are doing well, but the Chinese economy is seen in troubled waters, regulation, so on and so forth. So I think that is one huge reason why I am so confident in this trade shorting Robinhood. Also, analysts are calling for a 20% drop in Robinhood's price. Take a look at this. Robinhood app downloads plunged 78% amid crypto summer doldrums. Now, this is very important because Robinhood, they lose a lot of money. They also have a lot of debt, and basically they don't make that much money unless people trade. And then that's the whole argument where they send a majority of our order flows to Citadel and they manipulate the prices, do whatever they want with our order flows, ultimately screwing the individual retail investors. So I think there's a bit of emotions behind this trade, but on a fundamental basis, it makes a lot of sense to be shorting Robinhood at this current time. So in brief, this says Robinhood's app was very popular at the start of the year, but now downloads of the app have crashed. According to JP Morgan, this could lead to a drop in the company's stock price, analyst said. Now, right here, it says Robinhood stock could actually receive a hit as big as a 20% drop in value as the meme stock craze dies down, the investment bank analyst added in a note seen and reported by Bloomberg. Right there, that is the bombshell. But also right here as well, it says the Robinhood app allows would-be investors to buy stocks and cryptocurrencies easily and quickly. It has been particularly popular with young and amateur investors, but the app's download and active user metrics have fallen massively this quarter, dropping 78% and 40% respectively, the analyst noted. Now, it does talk about crypto being a main reason for that as well. Now, what else is important out of this? Nothing is really too important out of this, but I do want to point this out. It has also had trouble with regulators. The company in June was hit with a nearly $70 million fine over widespread and significant harm suffered by customers. This fine, the biggest ever dished out by the Financial Industry Regulatory Authority, was related to misleading communication, system outages, and inappropriate customer approvals for complicated trades. Obviously, Robinhood, they're definitely not perfect. They are far from perfect. They are horrible in my personal opinion. I am in the process of transferring the little money that I do have, well, I shouldn't say little, about $20,000, the smallest of all my portfolios, out of Robinhood and to take that somewhere else, probably Fidelity, since a lot of people keep telling me go to Fidelity. So that's probably where we are going to go next. Now, also, it comes down to the fact that Robinhood loses a lot of money. Take a look at this article. Robinhood reveals $80 billion in assets and $1.4 billion quarterly loss ahead of IPO. Now, it says, one day after a record fine from regulators, trading platform Robinhood Financial disclosed a slew of financials for the first time ever Thursday in a regulatory filing ahead of the company's long-awaited initial public offering, revealing a $1.4 billion first quarter loss despite massive growth fueled by frenzied stock trading and all-time high market highs during the pandemic. It does go on to say that despite the stunning sales growth, the company posted a first quarter loss of more than $1.4 billion after a $1.5 billion accounting expense related to the company's ballooning debt this year amid the market's increased volatility. So if you are seeing customers leaving Robinhood, their stream of money coming in, and they have this ballooning debt, this is going to be a huge issue. But regardless of all that, this is probably the least most important thing, is that the overall markets are in very bad times. So I think Robinhood, given everything we have talked about, obviously the situation with Citadel and Robinhood, the fact that apes are leaving, the fact that they are losing a lot of money, and they are seeing their app downloads going down 78% and their active users down 40%, they are going to take a massive hit on their earnings. And I do not have a current position on Robinhood. Like I said, I'm going to be making a position on Robinhood, not on Robinhood as far as the trading app, but on Robinhood, the stock. Now, earnings are November 15th, so I don't expect huge moves. Maybe next week, because this information did come out one day ago, so I do believe it was after market did close. We didn't see a big reaction, on Friday, only down about 0.5% in total. But their earnings, like I said, are November 15th and after hours. So you probably have a little bit of time to wait on this, but I am just going to make a longer term short position on Robinhood. And really, I think this is a hands down easy trade in my opinion, especially if you get in sooner rather than later. But keep in mind, guys, I am going to be trading options on this. I'm not going to be shorting the actual stock. I want the leverage that is involved with options. But if you are making an options trade, if you are not comfortable losing every single dollar you put into the trade, do not make the trade. The most that I'll probably put into this trade is about $500. I could spare to lose $500 and not have any emotional attachment to it. I'm not going to go too big on this, where obviously if it all expired worthless and I lost out thousands of dollars, I would be hurting. But it's really based off of your actual portfolio and what you can handle to lose, because options statistically expire worthless. But I think there is a massive trade here, so I did want to bring it to you guys, as well as the logic and the fundamental reasoning why I am going to be shorting Robinhood stock. Like I said, if you guys want to be notified when I do make this trade and any other trade that I do make, check out the link down below in the description for the buy and sell alerts. So that is that. But when it does come down to around November 15th, I think this ties in directly with the whole China situation, because obviously the debt ceiling crisis is going to be, hopefully coming to an ending around October 18th. I don't expect the US to default on its debt. We may get a credit downgrade, which historically has dropped the markets in between about 5 to 10% based off of a credit downgrade. If we do not pay our debt and we actually default, you're looking at minimum a 15 to 20% drop, maximum about a 50% drop in the overall markets, which would cause the AMC short squeeze. You'd see pain with AMC, and then you'd see ultimately that short squeeze really at the bottom of the market once liquidity is crunched. But like I said, expected around November 15th. By this time, I expect the debt ceiling to be raised, potentially our credit rating to have been downgraded. But this whole Evergrande situation, I think, is going to cause a lot more fear. Take a look at this. Goldman flags 8.2 trillion threat worse than China Evergrande. The real worrying concern that China Evergrande default drama is the inevitable, where there's smoke, there's fire paranoia that accompanies debt stumbles. And that's really it when it comes to this. This will not have too much economic impact as far as American businesses and what kind of revenue they are, making. But when you see big problems happening anywhere in the world, specifically with China, because they are the second largest economy, you will see that spill over into American markets. So if the Chinese real estate market, which is 15 to 25% of its overall GDP, does start to go down dramatically, the fear of this alone will make our markets go down. Probably not as much, but still a significant amount, because you guys got to remember, it's not necessarily about the numbers companies are doing. If you were investing in March like I was, you were thinking to yourself, this company is not going to be hit by the Rona. It's going to do just fine under the Rona, but every single stock went down under their justifiable valuation. That is simply due, the markets revolve around fear and greed. We have been in a lot of greed, specifically China taking on massive amounts of debt just in their real estate market. This is finally going to be coming to an end here in the near term future. And that's only my opinion. It may or may not happen. I think the likelihood of this happening is very strong, but probably not to the level of the 2008 global financial crisis. Now, this says, the most worrisome such blaze, says analyst Goldman Sachs, is surging local government debt levels, and President Xi Jinping's men have done their best to hide the default troubles at the globe's most indebted property development seem like small embers compared to the 8.2 trillion worth of local government financing vehicles outstanding. And what they are really talking about are essentially just a lot of infrastructure that was built that was not necessarily needed, that the Chinese government took out a lot of debt. Take a look at this. These are ghost cities. I'm not sure if you guys have heard of this or not, but really since 2008, to prop up their economy, like I said, 15 to 25% of their economy is in real estate. They have massive cities, massive cities that essentially have nobody living there. There's no businesses here. There's no restaurants. There's no outlets to get clothes or do anything here, but they have these massive cities. Take a look at this. Ghost cities is what they're called, or under inhabited cities, something like that. So you might have a couple people here and there living there that travel from other parts, but for the most part, take a look at this. Just nobody living here. Just massive buildings, condos, apartments that have nobody living there. Their whole economy is propped up on BS numbers, and this might finally come to fruition. I think this is likely to be even bigger than the debt ceiling crisis, but the debt ceiling crisis is likely to lead us in this downtrend until the Chinese bubble does pop, which in my personal opinion, it is getting ready to pop. So that is all for this video. We're going to be going over, here soon, what I expect to happen with AMC in the next week, what else you guys need to watch out for. So definitely stay tuned for that video. But that is all for this video. Tap, tickle, touch, or smash the like button. Consider subscribing to the channel, as well as let me know down below in the comments section, what do you think about this Robinhood trade? What do you think about the analysis that I provided to you guys in this video? The whole Evergrande situation, as well as the debt ceiling, Robinhood situation, literally everything. Let me know. I pretty much respond to every single comment. Like I said, buy and sell alerts, link down below in the description. If you guys want to support the channel directly, links for free stock, a link for public, as well as a link for Webull. So that is all for this video. Hopefully you guys got some value out of this video. You guys enjoy the rest of your weekend, and I will see you in the next one.